Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 7th. Michael Boutros here with you this morning. Great to see everyone in the room. It's been an interesting start to the week. Obviously, we're still working with the November opening ranges. It's been tough to kind of get a gauge of what's been going on with at least the weekly open. We came into some major key support. We saw some rebounds off that, both in the Aussie, pound, dollar yen off resistance. They kind of just held those ranges and came right back. So what do we do in those scenarios? We'll take a look at that. On the menu for today, DXY, obviously we'll take a quick look where that is. Aussie dollar from last night's RBA interest rate decision. Some interesting commentary coming out of the RBA. Nothing really changes, at least the immediate outlook for monetary policy. Take a look at the pound, dollar yen, dollar CAD I have on here, and Kiwi. It's a short list today, guys, so feel free. It's a good day to throw out any questions or trade setups that you'd like to review on any of the pairs I may have not mentioned there. Alan, Eman, Gary, Johan's in the room today. Peter, Mark, Kevin, Tom's, yeah, great to see everyone, as always. Okay, so here's where the DXY is. We were looking at it earlier in the week as we were coming to the start of the week, again noting that we held last month, the high was right at that parallel, extending off the initial October opening range high. It's exactly where we capped out. We pulled out, held right above that slope. Again, another parallel of that same operative slope just off these two lows. And we were looking for the break, really, to give us the correction sort of validation. We came into that support, kind of held back up near the highs, and we're still kind of holding right at that long-term 2011 trend line. So for the DXY, and I go over this every single day, guys, but I really can't stress how important this threshold is, okay, just on a basic slope. If we were to break that, you'd have to be looking for a rally towards 95.90 on a closed basis, right? So still not kind of getting on board with trying to get on the long side of the dollar, but it held over the monthly open at 94.60, which is initial support. That's still the level you need to break to get the validation for the reversal. Till that happens, you know, you just came off uptrend support, basically. So a little hesitant to do anything, really, to be quite frank with you guys, right here on the dollar index. I'll be watching for this. Obviously, we've been talking about this on the weekly charts and how the weekly close is actually going to be, you know, absolutely paramount as this thing has continued to hold on a close basis below this slope ever since the break. So still has some proving grounds to do for the dollar index as far as proving further upsides on the plate here. Pooja wants to take a look at Euro Yen if you have time. Sure do. Euro Yen. Morning, Michael. Can you please add to the update, Eman, Pound, Yen? Absolutely. We were covering that last week, right? Yeah, we'll take a look at what that's doing. I missed your list today because of a break in the audio. Sorry about that, Pooja. So DXY, Aussie, Pound, dollar Yen, dollar CAD, and Kiwi. Please do feel free to let me know, guys, if there's ever an issue with the audio on my end. Okay, so that's where the dollar index is. It's, you know, it's just still doing what it's been doing, just holding next to this resistance level. And again, you know, you talk about basic price action principles, and when price continues to hold at a trend line for such a long time, it's typically not a good indication that you're going to see a hold. So I wouldn't be surprised again if we probe higher into the channel resistance, start the month. Not my favorite scenario, but we got to be prepared if it pushes higher here. At the end of the day, you're still at the October range highs. Katarina, Pound is on there. I got you. No worries. Okay, so let's move into the juicy stuff. DXY, if anyone has questions, do feel free to throw them out. Really, there's no change at all on that. So from last night's update, or let me just go over the updates we did earlier. I do want to just jump right into the Aussie. We've been following this like a hawk. The focus and the emphasis have been on 76.32 for weeks now. A 618 critical Fibonacci retracement. You had slope support. You had downslope support, even for the confines of the decline that we're in right now. And even on the weekly charts, you had a whole host of stuff there. A 38.2 of the larger range from 2016, the 618 just from the lows that we made in May of this year. Slope support, the 52-week yearly moving average, all are still right there. Now, As we've said, ever since we started to approach this region, even if this does break, you still have to contend with 74, 76. A basic 50 split of the entire range off 2016, and you have a basic slope support, a slope which has been very fruitful for us so far. That would give you last-ditch effort dump into 74, 76. This would be the broader bullish invalidation. Remember, the assumption that this consolidation break is legit, this is kind of where you want to see support hold. Now, yesterday's RBA interest rate decision was interesting. Obviously we weren't expecting them to move on rates, but you heard some interesting commentary that hit the Aussie. First, they were talking about a higher Aussie is starting to weigh on output. You kind of look at the chart, and you can see a little bit of a concern of why they would be starting saying that on the longer term, but on the near term, this thing's been on the way down, but continuing to say that higher Aussie will weigh on output. Growth is expected, is pretty much unchanged, although they noted softness in CPI, softness in easing in housing, and said the outlook for household consumption is a point of uncertainty. So a little bit more of a cautious view. Yeah, not too hawkish for sure, right? It's pretty dovish. Is it enough to break the Aussie? Well, we're still holding above that key support at 76.32, that same level we've been talking about the last 2.5 weeks. Here's what Aussie looks like now. Again, the weekly chart, just to give you guys a quick peek. Again, this is the one that we've been following, still putting the emphasis on 76.32, 76.29 would be the 38.2 retracement of that larger advance. I'm not really stressing these slope lines anymore. This is basic slope support off the yearly lows here, but the basic lateral support, that 52-week moving average, all still stacked up there. And again, below 74, 76. So you have a clear break. You have a clear target of what you should be looking for if it breaks. Until it does, you're at support. Plain and simple. Uptrend support. So I can't really encourage anything on the short side. I still like the long side. The initial resistance that we talked about yesterday did hold. Here's the daily chart looks like. Okay. Here's the daily chart look like last night. We were trading up here. Support 76.32. Resistance, we were talking about that 200-day moving average. Okay. And there it was, capping the highs in overnight trade. So even on the near-term charts, again, 77 essentially, 76.99 former swing highs. 200-day was just below that. Intraday, we came into it, kissed, pushed right back, preserving the weekly opening range right above a critical support. So I think this one, the break, will give us the play we want. It might not be to the upside like we want to see, but if it breaks lower, initial targets, just initial 75, 71, and then you'd be looking for slope based on time. The initial convergence area where it starts to come on some Fibonacci considerations would be 75.16, 75.17. So, I'm inclined to look higher, but I have to face the facts. At the end of the day, the momentum signature failed ahead of 70, broke below 40, or kind of tried to break below 40 here. I wanted to see this thing break 60 on the way up, and we didn't. So the momentum, I wouldn't say is bearish, but it's not giving us a lot of conviction on the bullish side either. So we have to really respect a break of this range. As I said, ultimately 77.43 is what you need to see to kind of clear more of a constructive near-term path to the upside. But I can't get excited about any shorts into 76.32. I'd be looking for exhaustion again if we head into that region. Now I know Jamie's looking just basically for a touch of the lows to complete a pullback pattern here that taking to 76.25. Long story short, you're at support. You're still at a big support. And if you were to put a gun to my head right now, I'd still want to be long. You're holding a short from 76.82. Okay. I don't know what to do. LOL. So Kevin, I don't want to shake you out of. Again, I'm always a fan of guys kind of sticking to their convictions and learning from their own trades. But 76.85, your stop is what, against the high? On a trade like that, man, to be completely honest with you, Kevin, I would look to take some off. Because if this is just, again, we're holding this slope. If this is just bounce, 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 this could pop higher. It's definitely worth keeping some on, though, because if it breaks, you get a long way down. You'll get a nice play out of that. So usually when I'm in a scalp like that, or if I'm in an intraday position, I think, I'm coming up against support. So inherently, you want to take that position and close it out. It's a winner. But you have an indication, or momentum's trading heavy, or you have some event risk, which we don't. That's kind of out of the picture here. But obviously, if it were to break, you'd get a nice drop. So take maybe a little off, bring your stop to break even, have a target down. Maybe, I don't know how big your position is, but if you have the flexibility a little bit more off here, inevitably looking for a tag at a lower parallel. But just know, man, we're into support. It's very simple. But I just try to keep it as simple as possible. For me, super near-term trader, I'd be like in and out of this on the short side for sure. But I wouldn't want to be trying to press it too aggressively because, support is support. It could break, but logic says we want to kind of lighten the load there. So I hope that helps, Kevin. He says, yes, okay, thanks. You're more than welcome, man. So there's Aussie. Let's see what this dude can do. If we can hold here, still emphasis on a break above 77.43 to really convert this into a little bit more of a constructive near-term pattern. Here's what the 120 looks like, by the way. And even the 60. I was looking for something. Give me something of a divergence pattern or something. This was technically not divergence because it did make a lower low, but the weekly opening range low is now there. Objectively, the weekly open is here. Objectively, it's basically exactly where we just rebounded. So you're looking for a break above that 200-day moving average to really clear the way, at least until the breaking point is 77.45. And again, that's kind of my focus. Aussie, any questions? Going once, going twice. RBA's out of the way. You don't really have much left on tap. CPI figures were both softer than expected as well, so you're not really expecting too much of a constructive move here based on the fundamentals, let's call it. But near-term support is support. Okay, that's number two. Number three, pound. Here's what sterling looks like. I still like it. Really don't have too much to be concerned about yet. 130.30, 130.20, the same level we've been talking about for the last 5.5 weeks, is the level of which is still my near-term bullish invalidation level. I know on the weekly chart it looks like we've ventured outside the confines of the slope. When you bring this into the daily, it has a little bit of a different picture on it, but the lateral level still remains solid, and that's the outside reversal high week close prior to the break that we made here. That's been support ever since the breakthrough that we made back in September. So you're at support, plain and simple. Looking at this on the momentum scale, still holding well above, or firmly, let's just call it above the 50 level. So you can't really get bearish on this yet. Here's what pound looks like now on the daily chart. There's that same pitchfork again, extending instead of that low, we're using this swing low that we made back in October of last year. And you can see that slope is a little bit more fruitful with support, nice little touch of support right there. So, I'm still, look, the bullish invalidation level hasn't changed. 130.20, 130.30 is the broader bullish invalidation level. Last night, I moved that up. I choked it up into 130.60 for a couple of different reasons. 130.60 is going to be, the low close that we made for the month so far. It is also the low close that we made for that September move right here, that last low in late September, early October. So the October low close. The slope right now is right about there, 30.60, 30.50 as well. And if you jump into the intraday chart, it also is a 4-hour reversal close that we made at the lows. So all of that lines up right here. So I thought I'd choke that up. There's no point in getting overzealous on this. It's the opening range low for the week objectively. And if it breaks that, well, 30.20 is on tap, and if that's the last ditch effort, we'll look for a reaction there again. But I'm inclined to look higher. Okay, there's nothing here that's screaming bearish to me yet. The initial reaction and touch that we saw at that slope support last week was brilliant. It worked out really well. Saw a nice little rally into the weekly open, and that was near-term resistance. We opened this week saying the same thing. This is what we highlighted last night. I think pound was on the previous night's update. I might be lying. It was last night. Okay, and we were venturing higher. Now, again, the momentum ahead of 60 with the turn to the downside. So it doesn't necessarily mean that we're done. It just means we haven't quite thrusted. We haven't quite shifted on the momentum picture. So initial support, as we noted yesterday, at 31.27. We just tagged that and it's holding near term. If we do break lower, again, as long as 30.60 hold as support, I'm still inclined to think, you're still in the uptrend. You're still in the uptrend. Here's what it looks like on the 120. And here's the 60. Okay, so you're seeing some divergence right here. Not quite. Not quite. That would have been a really nice sort of exhaustion type of signal if this was lower, if this was higher, but it is not true divergence here. And it's a little more apparent on the 15 minutes. When you get on the real intraday, real near term, it starts to look a little clearer. But you get the picture, okay? I'm not looking for this decline to really I mean, look, if we break below 131.27, which is that level that I cited, sure, you're probably going to see a drop into the handle, into the 130.60 region, the weekly opening range lows, but that's still my bullish inval. So if you're holding longs for anything below this, I'd have it at break even just to play it safe, and if you get the rebound, try to get back in. If you're holding shorts, this is an area of which you want to be banking on a break here, because if we open the U.S. trade session, we break through the European opening range highs, I'd look for continuation. And at that point, hopefully we'd have some structure to play with as far as slope on the near term. But I'm looking for this thing to start to fizzle out, hopefully, on the downside. Questions on pound? Yeah, we're pretty light on pound data. I was just checking that out. Sorry about that for the wait. Yeah, we have industrial production as we head into the 10th, but nothing too pressing right here. All right, so that is sterling. You guys might have seen out the weekly intraday weekly highlights that we put out on the weekend. So we highlighted the two setups that we were looking at for the BOE, right? As we were heading into that, we wanted to see the pound rally. That came lower, obviously sharply, but it still held that key support. The one that did work, I'm going to take a quick segue here before we jump into dollar yen, into pound yen. This is for Puja, number 4. Pound yen was the player, for that release. We were right at resistance. We talked about this both on timescales of the daily chart, on the weekly chart, also a strong tell that this thing was coming into a major basic long-term Fibonacci consideration from the lows, from the highs of 2015. Some basic slope was in play there too. Perfect tag of that last week before pulling back sharply. So the daily chart also highlighted a near-term median line just off of this year's late lows, and that was resistance there too. So the play was for a pullback. I wanted to see this thing come into this zone, a little bit lower into the high day close, would have been previous high day close, where I was going to be looking for this thing to kind of find some support. We fizzled out just below it, kind of made a jump higher, but Puja, I still think there's still a little bit more downside to go here. Doesn't make me too encouraged for the pound trade, to be quite frank with you, but just from the way price action has sort of materialized, I still think this has got a little bit more to go. Now, if we come back in here and add the 50 line, did we just reverse off that? Oh, excuse me, the 38.2? Oh, no. No. Let's see what that does. This is 75% line, guys. So out of this range, 75%, usually use the 50s, but you see us use typically. We're just looking for slope reaction. So let's see what happens here. But you get the picture. I still think you need to make one last low in this before all is said and done. Not encouraging for our constructive pound trade, but encouraging for my dollar yen, which I do think, you know, it still needs to hold this resistance that we're probing into yet again, as irritating as that is. It's the yen, though. It's the abomination. It's why it's earned its reputation well. So for pound yen, Pooja, I mean, look for, you know, obviously the range lows for the week are here. The weekly open, this is kind of the gap that we made. So, you know, a move below 148, let's call it 149, is what I'd be looking for. 148.40, 147.80 areas of which you'd start to look to see a little bit more of a concrete reaction on what this thing is going to do. Remember, on whole, pound yen, excuse me, you know, I still think has a lot of room to go. It's just in the interim here, do we still have a further deeper correction to make before we move higher? You know, this thing broke some slopes really, you know, longer term from the highs in 2015. It was tagged twice this year alone, which kind of gives you a little bit more conviction. The 4-touch tag there, break, you'd expect a larger breakout than something like this. So, you know, basic slope offered some play off the yearly high. There's a perfect tag there and the pullback. So we're just trying to gauge whether this pullback off resistance, does it have a little bit more downside to go, or do you continue higher? You know, as long as you stay below the monthly open, I'd say it's sort of a safe bet. It's 151 essentially. It's 150.90 and change. 150.91. Okay, is the open. You know, as long as you stay below that, I'd be looking for one last low here to buy. Just my opinion. Near-term price. Again, this is a slope that we added last week. So here was pound yen last week into the BOE. Okay, as we were coming right into that resistance region. So this is a pitchfork added after the fact, just from off the highs that we made in September and the highs that we made in, well, this month's high. So the levels remain the same. There's that 147.68 level. We just had to move this up to account for the new high in price. It's the only change that you've seen in target. Questions on pound yen? Pooja, does that make sense? I think your risk here is for a little bit of a move lower. Bearish invalidation is going to be just, you know, objectively is going to be 151, 150.91. Okay. Oh, I think that was for Eman. Well, you were looking for pound yen, right? Yeah, you're more than welcome. Pooja's saying thanks for crediting me with the guts to trade pound yen, but I guess I'm not up to it just now! Exclamation point. Yeah, I mean the play I think for me was last week. I'll tell you why. Because you know, ultimately, you guys know we like at least myself. I know that Jamie's on the same page. We kind of still like the pound to the upside on the longer term. We did take a short on that spike on last week, but largely speaking, it still remains within the constructive path that we've been looking at. Now, pound yen looked specifically interesting because of the relative positioning of where everything was. You know, pound was going to break down. It would have been the better play because dollar yen was at resistance, and that's what I want to take a look at now. You know, here's where dollar yen is. It's the same godforsaken resistance level we've been talking about for weeks. Very irritating. You know, some shorts off this have worked multiple times in various last couple of weeks, but they're short-lived. They just don't have any energy. You know, a lot of times these turns can take time. We haven't invalidated anything necessarily. We're just like glued to this uptrend resistance, and I just, you know, I'm not really sure how you want to play this, guys. From a near-term point like me, I still keep looking for exhaustion. And it's been paying out on like really near terms, but we're talking about like just a few pips here and there. To get the validation of the trade reversal, the thing that continues just to shine now is basically the monthly open, which is just above the objective monthly opening range lows. And that at least would give us, okay, near term, boom, let's try to see that near term correction to the downside. I can't get bullish here. I just can't do it. Even on an intraday, I can't bring myself to get excited about any type of long positioning, into 1430. It's such a critical region. We've seen already multiple monthly highs this year at that region. It was last month's high. Now you got slope there. Now you got the 618 still there. The high close, the stretch highs. It's just not advisable for me to continue to try pressing any type of long exposure. Add to that you've been seeing some divergence in momentum. Daily chart momentum making lower highs on a close basis, right? Making higher highs in price. So what do you do here? Patience pays, and then often on a trade like this, it's going to give you a break in one direction or the other. It's either going to fake us all out and just rip into 115.50, or, again, my favorite play, you get a near-term break below this momentum trigger, you get a break below the monthly open, you see a little bit more of a correction in this. And that would bode well for, just broader dollar opinion at this point near resistance and possible yen strength. This is why heading into the BOE, the dollar or the pound yen trade just seemed so kind of intuitive for me. So post BOE pound yen price action, in my opinion, still begs for another low. If we can get a little bit more of a yen strength move, that would also bode well for some sort of pullback in dollar yen. Here's what it looks like on the intraday chart. We've been working with this near-term slope. I guess it's not too near-term. It's from the September and August lows there, but it's near-term considering it's dollar yen and what we've been looking at on the larger scale. And again, all of those fib relationships, 114.30. You had the actual stretch high at 114.50. You have the actual close highs from back in May at 114.36. Nice little range there, 114.30 to 114.50. So early in the week, on the Sunday update, if I'm not mistaken, well, we talked about it last night as well. We might as well just go there. Here's the most recent chart. But on the Sunday update, we were looking at this and we were saying, hey, look, it's probing right through the open, and you get really suspicious when you see this. When you see a major resistance that's been tested already, open with a gap through the open, I don't want to just throw a 9 times out of 10 there comment, but like very, very often the markets, if they come back to test those gap opens or those breakout plays, if it's through a major resistance, that needs to be sustained. If this was a break that was legit, this needed to really just ramp up. Any type of hesitation and pullback below, will typically is just a scream of exhaustion. So I was really convinced yesterday. I loved it. I loved how we opened the week, and I loved that it came right back below and slid lower. I was looking for a move into 113.44. Any short exposure you have, and unfortunately that was my target, needs to be down here. And that it can't be any further, because that's the level that needs to break to get us the validation for a broader pullback in dollar yen. Former swing highs from the October opening range, basic slope support. Very, very simple. So obviously early in the week on the Sunday open, we had moved higher. That was our kind of warning. Fast forward to where we were yesterday on dollar yen. Here was the pullback. Looked pretty assertive. We were noting that momentum was kind of not looking too convincing here, but 113.44 was still the initial target on the drop there. We turned just ahead, right back at resistance. That's still the level to beat. So if, again, put a gun to my head, I'd still be looking lower against 1450. That's the level we need to, that's my bearish invalidation level, period. 1450 gets out. I think 115.43, 115.51 is a conservative target. Conservative target. And that'll give you a 100 pip basic breakout to the upside. So how do we play it? If you're looking, well, if even on a relative basis here, if we get a decent trigger on the open of U.S. trade, short here, watch that parallel. Okay, don't take it all into 1344 if not necessary. Look where that parallel comes into play and see a kind of reaction there. If it breaks to the upside, I'd still be looking for a pullback and an entry somewhere here to play the breakout. just an intraday. But as long as we're below 1450, I'm not trying to get long. Questions on dollar yen. Iman says, yep, couldn't be patient with this abomination dollar yen. I played it short from 114.23 with a stop at 114.80. Okay, so you're a little bit in the money here, right? Well, I know the swing trades is a different play. So if we're talking about the swing trades, guys, yeah, I love that 1480 stop gives us a lot of room. When I'm trading intraday, don't really have that tolerance of an 80 pip or even a 50 pip stop. I'm playing typically a little bit higher leverage and lower risk tolerance per trade. But in general, yeah, we both want to see it lower. Both want to see it lower. It's just dollar yen, dude. It can continue to do this for another, 2 or 3 days before we get the final resolution break. But all things held constant, this thing's still looking a little bit tired. Even on the highs that we made on this 4-hour chart, you can see divergence. Momentum rock solid at 65, as price obviously made a new high before turning. Questions on dollar yen. So, you kind of look for risk in general, guys, broader risk tolerance in the market heading into this next couple of days of trading. You really have a lack of U.S. data coming out. The Fed is kind of a moot point until December, which they're expected to hike at already. It's really, I hate to say it, but it's kind of like all these geopolitical events that are really going to be weighing, I think, on broader market sentiment. And I think that's where we're going to get a little bit more clarity on the break here in dollar yen, barring any major data coming out of Japan or the United States. Obviously the president is visiting overseas in all the Asia Pacific region right now. That's kind of leading headlines. You also have the news that's been pouring out of Saudi Arabia. That may have a larger impact on market psychology. Look, I'm not going to give you my opinion on that necessarily per se from the political aspect, but the whole point is this. If they're doing this whole sweeping, trying to clean out corruption, that's all good and dandy. The risk of a destabilizing in the region is basically catastrophic. For the crude markets, you've seen obviously oil has been ripping higher. I don't attribute necessarily that all to what's been going on because that's been a bullish trade. We talked about that earlier in the month, but these are the geopolitical risks I think that the markets are starting to pay a little bit more attention to now. If you flip on CNBC or if you flip on Bloomberg or Reuters, these are the topics that you'll continue to see sort of headlines after headline after headline, and that tells you what the market's really focused on right now. Fed policy, you have a change of hand, you have a change of the guard. So Jerome Powell's seen as someone who's largely going to carry over that very slow, methodical approach to normalization that Yellen's been basically focused on. So there's not really a big shock to any expectation of what's going to happen on that front. You also got the news over the weekend that William Dudley was leaving the Bank of the Fed in New York, and obviously the New York Fed is one of the permanent positions, so or permanent voters rather. So that's kind of a big news that we got. Still didn't phase everything. So watch those geopolitical and headlines coming out as sort of the major risk driver with the lack of data that we have on tap this week. That said, we do have the Kiwi dollar RBNZ interest rate decision in just a few days. Here's what Kiwi looks like. So Kiwi was last covered. I'm a little disheveled today, guys. Sorry about that, about my the order that we're going in here, but I'm kind of going off the cuff with the Kiwi. This is the bigger event risk that's going to happen over the next 2 days, really, the rate decision. Again, not necessarily that they're going to shift on rates per se, but from where price action is trading. So we highlighted this trade earlier in the month. The basic premise was that we were coming into a big area of key support defined on the weekly charts by obviously the 2016 open, the objective yearly opening range lows, and the low day close for the year. Okay, we came right into it and held as support rock solid. The thing stays bear sub 70. Okay, objectively, upslope support tested once, tested twice, tested thrice, and there's the break. So even if you get the recovery into 70-38, 70 handles the ideal scenario. this thing's still bearish. You need to see a break below the yearly opening range low to really validate a continuation. 67.16 initial target, then you'd be down all the way into the median line. Now this is the weekly chart. So all we're highlighting here is that we're into major support. We're looking for a rebound, both on the near term that gives us a little bit of an opportunity to play the longs, and for the swing guys, we're looking for exhaustion here to get short. So fast forward, or this was what it looked like on the daily chart. We came right into resistance towards the latter part of the week. Again, bullish invalidation up here. Here's what the 240-minute chart looked like on the bounce and support. Shift higher, looking for that median line clip. Didn't quite get the median line clip last week. Pulled back, October low day close held, and the rally clipped the median line before pulling back. So here's the thing with Kiwi. I'm kind of inclined to do something, but I don't know if we're going to get any volatility on RBNZ. But I'll tell you what my preferred plays would be. If this thing were to rip higher on the RBNZ, I'd still be looking for exhaustion near 170. As it stands right now, you're testing the weekly open objectively. So you kind of have a decent weekly opening range on a Sunday, Monday stretch. If we break below the low day close, then you'd look for another continuation. But you still, if you're on shorts, you still got to do something here. 68.27, 68.30. Bring your stops in, if not anything, okay, and see if you can't get the downside break inevitably. But it's either a short off this region, or if you break the opening range lows, look for rallies to sell, trying to get that move below 68.30. Okay, still bearish invalidation, even on the daily chart. And here's what Kiwi looked like last night, or I guess this is the Sunday update. Questions on New Zealand dollar. RBNZ on tap tomorrow afternoon, tomorrow in the evening here, shortly after the close of U.S. trade. You'll get the RBNZ interest rate decision. Yeah, it's not compelling divergence, but failure to show new extremes in the oscillator as the price action made new extremes, still suggesting could be a little bit of an exhaustion. I at least need to see the break of the weekly opening range to get that conviction. Otherwise, I'd still be really interested in selling a sort of spike on the RBNZ if we get it. Any questions on New Zealand dollar? We'll visit this one again tomorrow, guys. Right ahead of the release, so we'll have a better picture of kind of where we are then, but bearish sub 70. Okie dokie, moving right along. Dollar CAD, number 7 on the session. Here's what dollar CAD looks like, and here's what dollar CAD looked like last night. So this thing, I guess we should start off with the previous update, which had the weekly, the daily charts, and just showing why we were looking for the pullback in dollar CAD to begin with. Heading into Friday's non-farm payroll, sort of dollar CAD double witching, and CAD employment data, you had that confluence there. It's a 50% retracement. The upper slope there was seeing some resistance as well, and ideally a 129.27 short would have been what I would have been looking for. You never quite got there, failed just ahead. With the break below this parallel is really what put this thing in play, and that's what the focus was on last week, was a break of this near-term parallel, targeting initially this region, and ultimately a larger correction. Yeah, in dollar CAD, sure, why not? Coming off uptrend resistance, very simple, and the broader downtrend resistance. So if this is failure to come into the, and this is just an exhaustion trade, great. I wanted to see a hold below this region as resistance on this move to continue favoring the downside. So heading, again, fast forward to last night, there was the break of the other parallel that we talked about in yesterday's webinar. We've since recovered, now testing the range highs. So I'm a little hesitant to do anything just here, okay? Obviously, that's a clear divergence signal and momentum, price action making a lower low, the oscillator making a higher low. You also had a clear-cut trigger, okay, in momentum, right there, and multiple touches, okay? That gave out. So I'm really concerned that this is going to make another run towards 2860 or so before it turns over again. A couple of levels I'd look at. That's an ugly color. Let's do something like that. Okay, it's 28 and 2834 on the upside here to see if you get signs of exhaustion. It's sort of where you'd want to see the initial sort of hold. But you know, the exhaustion or the reversal back above that median line for me changes things near term on building divergence. It suggests you have a little bit more of a bounce to go here before you make another move. So hesitant to necessarily try to fight this here. Want to see 2834 hold as resistance, at least on this move. That's also the Friday high that we made there on NFPs. It would sort of be a nice initial move there before turning over. Questions on dollar CAD? I need to get rid of that high day close at this point. And I'm not going to stress that 2860 anymore. So here, if you want to take a quick snapshot, for anyone who's new to the room, by the way, I see a couple new people in here. Feel free to click on that camera button in the top right corner, or in the middle of your GoToWebinar screen, rather, if you want to take a snapshot. But there's not really much a change to any of the levels. I just added that quick retracement and want to see, again, I want to see if this stretch holds sub 2834, if our interpretation that we might be putting in a near-term high in play here. Questions on dollar CAD? Okay. I got pound for Eman, a pound yen I got for Eman. Pooja wanted euro yen. Was that you? Yeah, gotcha. Okay. That'd be number 8. So, well, you know what? Let me do this real quick, Pooja. Let me do euro, and then we'll do euro yen. So you know where I stand kind of on the yen. I would like to see a little bout of yen strength. Euro looks heavy, so that's going to be number 8, and then euro yen will be number 9. Euro looks heavy, okay, but I didn't want to get too excited. You know, I was just talking with one of the guys on Daily FX, and he was all getting excited. He's all, euro broke, it's over, it's going to crash. Well, you know, I was just telling him I don't necessarily disagree that there's probably more downside to go, but it hit our initial target, and that was 115.53. Okay, that's a measured move of the, you know, near-term head and shoulders break right here. Okay, left shoulder, head, right shoulder, typically off suit. You got that little trend line break. That gives you the break. Looking for a measured move of that range. 200% extension gives you 115.54. So I think it might be, you know, we might look for a little bounce here. You know, you don't necessarily have divergence and momentum yet. On the near-term charts you do, so if you take a look at a 2-hour chart or even a 60-minute, probably show it as well. Price action making a new low. Well, the 120 has it a little bit better. Making a new low, the oscillator holding those lows. You haven't gotten necessarily a full-on reversal signal yet, but you know, add a touch of support, sure. I wouldn't be surprised to see a little bit of a rebound here. Ultimately, I still think this thing has lower to go. You know, keeping in mind the larger picture, this was a huge break. This was a huge break. Now, I'm not going to lie, I kind of wanted to see it rally into this point earlier in the month for us to fade. If you remember, the idea was to kind of fade euro strength on an early month rally, but it held right below, you know, right below former swing lows, the 100-day moving average. So if you look at the larger head and shoulders formation, which may have broken on that, that measured objective move takes you much lower. Okay, so if we go back to the 4-hour here, and this is just kind of a drill. The larger head and shoulder break, left shoulder, head, right shoulder, that measured move would take you down. Would take you down into 112.34. Kind of aggressive. Kind of aggressive. May definitely be on the cards, but kind of aggressive. For now, though, first things first. That mini head and shoulders, the initial one that we broke, first target's hit. Okay, momentum, not the craziest divergent signal, but it's not giving us all that much of a bearish play. So I'm looking for a near-term recovery in euro. That's my problem with euro yen. So here's what euro yen looks like. Again, ultimately bearish, near-term resistance still 116.16. Look for that parallel there. Would be kind of a nice area for exhaustion. But for euro yen, it's getting messy. I was looking at this yesterday. Ultimately, this would be like an ultimate short signal because euro kind of broke that major supports that ultimately gave you a bearish impact on euro. Dollar yen reversed and held major resistance last week, right? That kind of gave us a right indication maybe we might be in for some possible near-term yen strength. So with the near-term price action that we see in euro kind of giving us indications of maybe we're in for a little bit of a bounce. The immediate view here for me is kind of a little foggy still. I'll note a couple of things. Divergence, okay? If we close this candle anywhere near where we are right now, this is beautiful divergence, a slightly lower low and a slightly higher high, but a strong signal. When the divergent reference points are close to 50, those will tend to be your strongest signal. It's kind of a misconception people have. Divergence below 30 and divergence above 70, when you get those signals, those are already markets are at extremes, so you don't want to put too much emphasis on those. But these subtle divergences near 50 typically are very strong. So yeah, I think this could see a little bit of a bounce. What were you saying there, Pooja? I think there was support at 132, but it's not to be. I mean, you're back above it. What do you have there at 132? I don't necessarily have anything pressing, but let me do this. Bear with me one sec, guys. Let me clean up this chart. It's not really a trade I've been following. I wouldn't stress the October open at this point. 2016 high we'll leave on there. Okay, might as well put this at the August high instead of the August opening range high. That gives us this. What do I want to do? Oh, this is the high. Okay, right. So listen, so if this high that we made on Friday was something significant, let's see, we might be testing here the 618. That might be what's hanging this up. No, still got a ways to go before that too. Interesting. Pooja, where are you taking those reference points from? She says there is a pitchfork median line. It's 22nd of September. Okay, so you're moving this the October 5th. Whoop. Using that. Okay, you might be onto something here. There's a perfect tag of the 50 line. Median lines have seen breaks and accelerations on both sides. Nice tag of resistance. Not a bad find, Pooja. Not a bad find. Yeah, that looks interesting. It just goes to show you guys, you don't want to be so super rigid with your formulations of your pitchfork. It's all about the gradient. Don't stress the reference points. Now, don't get completely random with it, right? Obviously, if we're looking for a lower market, we want to look for a low, high, low, or a high, low, high, rather. If we're looking for a higher market, we want to look for a low, high, low. But, you know, it's more of an art form, right? Sometimes you got to be a little bit more meticulous and take an offshoot to get the proper slope. And I think this is onto something. I wouldn't get too excited with it just yet, but that would give us an explanation for these kind of down targets here. And on building momentum, that would actually give me a little bit more of a conviction reversal play. Um, Again, we're calling in your term low in price, Puja. So if you're taking anything on the long side, try to keep your stops pretty tight. It's still this level, actually. The new slope we just derived here further highlights and extenuates that near-term support at 131.70 to 131.65 there. You know, especially later out this week, it's going to be a pretty big region of support. How would you enter a long or a long on a near-term charts? So on this one, let's do a drill here. Here's the 120. Here's the 60. Okay, so we're seeing about 150 pips on a daily range here. They say about like 30, 40 pips per scalp would be about right. Yeah, I mean, look, it's starting to run away with you actually already. So I'd be thinking like if you were going to get into something like this, your entry would have been on that break there, somewhere in the range of like 30, 32, just like you thought, just like you thought. You know, this could be just a near-term sort of consolidation break near the lows. You know what I mean? So an objective measured move off that would give you a target up here near 132.23, 130, excuse me, 132.33. You know, that's just like super near term, guys. I'm literally looking at a 5-minute chart. But those would be the implications. Now, before you start to get all excited about something like that, also on a move like this, I would take consideration of the basic 618. That would be 132.20. But it's kind of running away from us. So Pooja, do you understand? You probably should have jumped in this earlier in the session. We probably would have caught it. Yeah, this is sort of the move that, at least in momentum, looks really convincing, at least for a topside break. You've been seeing 50 holds as resistance the entire time on this pull, on this consolidation. As soon as the consolidation break plays, you kind of need to just jump in and have a stop against the low. So that being said, respect this immediate range. But on whole, looks like you could be seeing some near-term exhaustion in this. I'd be just real cautious because the euro long is a tough thing to get into. It's just from where we're trading right now. Does that make sense? Okay, maybe a retest of that top line. That would be the ideal scenario. If you got that, that would be sweet. That would be definitely sweet. Yeah. Look, at this point, after price action has done something like this, Pooja, you just need to be comfortable with your stop. As long as you're okay with a stop against that low, below 131.90 or so, then you know it's really just what you're working with as far as how aggressive a target you want to see. As I said, 132.20 would sort of be my initial area, so that's basically 20 pips away. Your stop would be below 131.90, so you're almost working with a one-to-one there. But ultimately, that 200%, which I don't know why it's not showing right now. It's weird. Got to get closer in time frame. that 200% would be sort of just an initial objective measured move, right, on basic technical analysis break. Make sense, Pooja? Does that help? And that is Euro Yen, number 9. Okay, thanks. Nice drill. You're more than welcome. Yeah, if you guys are ever interested in something like eminent like that, again, I can't tell you exactly where to get in, get out, but definitely I will be more than happy to give you my interpretation of what the immediate near-term charts are saying. It's kind of how we get into the nitty-gritty when we're really getting into it. Okay, one last note on gold before we close out the session here. I did want to note that, we did break above the monthly open at 618. This is the monthly open from last month, by the way. But the 618 retracement that we were talking about, sort of a nice pivot in price. We highlighted that early in the week. Basic slope resistance came right up against that. We probed just through it yesterday before pulling back. Here's the real test. If we make it back through these highs, I really would like to be back on the constructive side of gold. You see that momentum has been struggling to get to mount above that 60 level, but on the pullbacks, more or less been holding above 40, which is, again, pretty indicative of range-bound price action, but pretty indicative of a shift in momentum, specifically from coming from oversold. Now you start some more support, more support, more support. We want to really get to that top side thrust. So above here, or above the monthly opening range high, you'd look for at least 1289 on the 618. Ultimately, 1305, 1309 is what I want to see. Okay. One other thing I just wanted to look at real quick. What does this look like? Okay, 618 starts to line up at the same level, so everything looks good here. This is a near-term chart for gold, by the way. Whoops. Here's the daily. Significance of this region is really, really, really important. So monthly opening range setting up right above major support. Should be a sweet break once we get it. Okay, any other questions before we wrap up this session? We had a big crowd today, guys. It was great to see you all in the room. We'll be back on tomorrow morning, 8:30, for another update and a nice look ahead of the RBNZ. We'll take another look at what that looks like right ahead of the interest rate decision. Look, for Kiwi, it's kind of just make or break here. Either a rally to 70 to sell, or give me a break below the October low day close to give me the conviction for a push lower. But again, that's sort of the only event risk I'm actually looking forward to this week. Other than that, keep your eyes on the headlines. We will update you, obviously, if anything pressing comes along those on SB Squawk. Guys, till then, best of luck trading. I'll see you all tomorrow morning. Cheers.